All right, as we were speaking about earlier, crude prices mixed today on the news that Libyan rebels have entered the capital of Tripoli. And with a new Libyan government, maybe could that come stabilized oil production? We know that they have gone to 100,000 barrels of oil a day, down from about 1.6 million barrels of oil a day before the rebel activity, before the revolution. So how is this going to affect world oil markets and in particularly markets in Europe? My guests are John Licata, Chief Commodity Strategist at Blue Phoenix. John is also the editor of the Commodity Chronicles. John, good to have you with us. As always, you've been taking a look at what's happening in Libya. The implications, are they really more important for what goes on in Italy because there are also Libyan holdings? They own assets in Italy, and Italy gets, what, a fifth to a quarter of its natural gas and oil from Libya?
That's exactly right, Pimm. I think lost in what we're seeing right now is the fact that Silvio Berlusconi is actually traveling over to Libya. Libya has a 7% interest in UniCredit, the biggest bank in Italy. They also own 7% of Juventus, the famous soccer team. So there could be some asset selling right now as the rebels come in. Libya, with Italy, is very important. Italy imports over 80% of their power. 20% of natural gas is actually imported from Libya. 25% of Italy's crude oil comes from Libya as well. This is very, very important, and I don't think that we're going to see a quick fix, as many people think we're going to see.
All right, let's bring in Aram Nerguizian. He is a visiting scholar at the Center for Strategic and International Studies. He joins us from Washington. Aram, Silvio Berlusconi, he's already scheduled a trip to Libya. What are the implications if indeed the rebels seize control of the government and they're able to increase oil production? Good for Italy, right?
Well, Pimm, we have to be honest about the expectations. This is a opposition force that has no legacy in terms of governance. We don't know what their structure will look like. We have to set realistic and pragmatic expectations of what this means in terms of governance for Libya in the future, in terms of linkages to future oil supply. And of course, any international effort will have to be weighed against any kind of short-term effort that kind of leads into a much longer pattern of assistance. So really, this period is going to be marked by continued uncertainty and instability. It's really a case of putting pragmatism before hope.
Aram, do we know what the rebels stand for, or indeed who they are, other than their cohesive action against Muammar Gaddafi?
Again, unity against a threat, while effective and meaningful in the short term, does not translate into unity of purpose for the future. It's unclear what the post-Qaddafi structure will really look like. It's also unclear whether the fissures that divide Libya along tribal, clan-based, and other lines are going to assert themselves in any meaningful way. It's really too soon to say, I'm afraid. We're looking at a much longer-term struggle. We're looking at a consolidation process that will take months, if not longer.
Yeah, just to echo Aram's point, I actually think it's going to take much longer than months. Perhaps when it comes to natural gas supplies, you can make the case that Libya can get back where they were in February in 6 months. But the fact of the matter is it can take perhaps a year and a half to get back to that 1.6 million barrels a day. You got major companies that recently just signed deals, whether we're talking about Exxon.
BP has mentioned that they are ready to go back in.
Well, they're ready to go. Of course, they want to go back in. This is a great opportunity to perhaps run up from 1.6 million barrels a day to get it potentially by the end of the decade, maybe close to 2.53 million barrels a day. But that's going to take time. You have to look at it from a different perspective. Look at companies like Occidental Petroleum. They're waiting to see what's going to happen. Eni, you mentioned in your earlier segment about Eni, the Italian oil refiner. They haven't even sent workers to go look at the damages that might actually be done. I think that's an important player because they're the biggest foreign investor in terms of crude oil out there is Eni. So I think there's still a lot of big unknowns. Secretary of Fed Defense William Cohen, you interviewed him just recently. That was interesting. He said we don't know what tomorrow's going to bring. And my point is that we still don't have a clear alternative to crude oil. So in my opinion, and at a Blue Phoenix, Pimm, that this perhaps sell-off that we've been seeing in the energy complex is a great opportunity to buy. OPEC is kind of strangleholded right now. They're not going to come in and cut supply actually to boost a supply to get that price down. They're not going to do that right now, and they're also not going to cut to jack prices up. We got a hurricane warning today from NOAA, and people are concerned about the Gulf. It's not the time. They don't have the effort to do that right now.
All right, so you're bullish, I can tell, on what's going on in crude. You want to be buying right now.
Blue Phoenix believes $95 by the end of the year.
Aram, come in on the topic of the population of Libya. We've seen whenever you have any tumultuous change in government, certain members of the population, they want to get up and leave. They want to get away from the chaos. Are you going to see open borders from Libya? Are there going to be more pressures of immigrants moving to Italy, for example?
We can't expect a quick fix to the struggle in Libya. We can't imagine a scenario where you're going to have a consolidation of the security environment. You have a divided security apparatus. These divisions will take a long time to address, perhaps even longer to smooth out in their entirety. You're going to continue to see heavy migration. It's just a fact, given the economics, given the social pressures on urban centers, given the pressure on some of the rural areas as well. You're looking at a very long-term struggle where you're going to have a security vacuum, where you're going to have instability, which will impact whether or not companies choose to invest, which is why it's essential that you have at least a short-term aid process that's not driven so much by an advisory role, so much as a management process that looks at this as a contingency that needs to be addressed before you can have a much more long-term internationally driven aid process. So you're looking at social pressures, domestic pressures that will take months, if not years, to resolve. Migration from Libya is going to continue. And frankly, other countries that are more stable and are also seeing protests are showing the trend. We're looking at a pattern of instability. We're looking at years of human capital flight.
All right, we've got to leave it there. Gentlemen, I want to thank you very much. Aram Nerguizian joining us from the Center for Strategic and International Studies, and John Licata from Blue Phoenix.